He said, well, let me tell you something. If I got to leave the country, I can hide $200 million of Bitcoin in my body somewhere, okay, on a USB. I can't do the same thing with gold.
I know you said, quote, when I left the White House, the first thing I did was buy the URL skybridgebitcoin.com. It became clear from my discussions with the Treasury that they were going to digitize the dollar, and the gateway for that digitization I felt was going to be Bitcoin. You were first on this, especially in your kind of space.
I don't want to be overly philosophical, but there was a eureka moment for me. When Marc Andreessen said that this was more important to work on than the Netscape browser that he created, than the actual web browser, I said, it was okay, I got to understand this better. When Jack Dorsey, the founder of Square and Twitter, said that the most important thing he can work on in his lifetime is Bitcoin and the blockchain. These guys are a lot smarter than me, Brian. And I said, okay, I have to understand where they're coming from. Build the habits of success. You don't have to go to Harvard, but if you have great habits of success and you repeat them, good things are going to happen. Go for it, man. Go for it. You know, in 120 short years, unless we solve for aging, and maybe we will, everyone that is taking a breath on this planet will not be here. The world's moving. You got to either be a part of the world or you're going to be left behind. And that's what I try to do. I get up in the morning and say, okay, let's go. What are we doing today?
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Anthony Scaramucci, the investment fund manager, cryptocurrency enthusiast, author, and former White House communications director. You are the founder and managing partner of Skybridge Capital, a global investment firm with $9 billion under management, and you chair the SALT Conference, which has hosted President George W. Bush, Sir Richard Branson, and Mike Tyson. You've been ranked in the top 100 most powerful people in global finance and currently manage around $500 million worth of Bitcoin, which you describe as, quote, the apex predator of digital currencies. Anthony, the Mooch himself, welcome back to London Real.
Well, it's great to be on. We also had Joe Biden at that conference that you were referencing, and you left out my Led Zeppelin shirt. I'm channeling Raoul Paul, my contemporary at Goldman, with my Led Zeppelin shirt on, but you're catching me here on Labor Day weekend, so I apologize for not being in the cool threads that you always wear, Brian.
Well, you look great, and like I said, your former Goldman guys are either wearing Led Zeppelin shirts or Raoul Paul was rocking the Death Row. At least you guys got style, so I'm cool with that. Look, it's great to have you here. Last time you were on the show was February of last year. You were here in London, international travel, right? We remember that. And Anthony, we didn't mention Bitcoin a single time. I think that's going to change today. Let me bring you up to speed with what we've been up to because it kind of frames this. And then I want to get into what you've been talking about these last couple of years and how you went in. 2 months after you left, we were broadcasting here. We had the second largest YouTube live stream in the world on April 6th, second only to your former boss, President Trump, that day for his briefing. And 30 minutes later, we got deleted and banned, and we went on a freedom of speech fight for the next few months against some of the digital platforms. In August of last year, I decided to take it even further and run to be mayor of London. We went really big, biggest digital campaign in British history, outdoor ads, 5,000 miles. I had a bus with my face on it. The police tried to stop me and ban me for campaigning. We kind of fought back and fought for free and fair elections. Needless to say, I'm not mayor. We lost. And I was looking of what we were going to do next, Anthony, and DeFi had kind of caught my eye. And the more I looked into it, it reminded me of what I was doing at Bankers Trust in the 1990s in fixed income derivatives. Now, I know you joined Wall Street probably about 4 or 5 years earlier than me, but we were like the rocket scientists at Bankers Trust. They recruited me from MIT, and the stuff we were doing was kind of next level stuff. And when I looked at the yield swapping and the liquidity pools, I was like, wow, this is next level innovation, and it's got real volume, and the rate of innovation, I've never seen anything like this. And I was in the dot-com boom, and I thought, wow, this is super exciting, and I really want to be involved in this. So we created a DeFi Academy. We graduated hundreds of students, and funny enough, we've been talking about crypto for a long time. I had Max Kaiser here back in 2013 screaming about Bitcoin. I had Andreessen Antonopoulos here in 2015, 17, and 19 talking about the internet of money, the future of money, but it hadn't happened yet. And now it's happening, and it's so exciting. And so, I've been watching your own journey with Bitcoin and with crypto. And I know you said, quote, when I left the White House, the first thing I did was buy the URL skybridgebitcoin.com. It became clear from my discussions with the Treasury that they were going to digitize the dollar, and the gateway for that digitization I felt was going to be Bitcoin. Anthony, maybe you can tell me about this journey of yours, because as usual, you were first on this, especially in your kind of space. And I know you probably lost some investors by going in. Talk to me about your journey with Bitcoin.
Definitely lost some investors while going in. A lot of, the acronym FUD, fear, uncertainty, and doubt, but there's also fuddy-duddies, Brian. And so we have a lot of older fuddy-duddies that don't like Bitcoin, or they follow Warren Buffett around. And of course, Mr. Buffett said it was rat poison squared. But you are bringing up my departure from the White House, my unceremonious and brief stay there. But I did learn a lot. And remember, people don't remember this. I was the chief strategy officer at the XM Bank for a period of time as well, prior to joining the White House as comms director. And there, it became very clear to me that the yuan is digitizing, the Chinese currency, and the United States will need to digitize its currency. The question is when. I don't think it's an if question. I think it's a when question. And by the way, there's a lot of value to the United States doing that. Weirdly, there's a shortage of dollars. We are in a dollarized world. And so when you think of the steady flow of global commerce and people want to denominate that commerce in dollars, a digitization would actually offer a competitive advantage and some value to the US. And so why Bitcoin? Well, Bitcoin is, in my mind, the apex predator of the digital currencies. It has the largest market cap. It eclipses the others. It's probably 60-ish, depending on the day, 55 to 60% of the overall market capitalization of cryptocurrencies. And its scarcity, I think it makes it very valuable long-term. So a couple of things had to happen for us. I'll just be brief. One, we had to see these go to 100 million wallets. That looked like it was going to happen last October. That's when we started accumulating positions. Number two, I had to get comfortable with storage because we're an institutional investor. We have over $1 billion of Bitcoin and Ethereum at this point. And I had to make sure I could store it safely. And Fidelity provides that. New York Digital Investment Group does. There's a layer of insurance from Lloyd's of London on those. And they're held in cold storage, meaning they're uncorded from the internet. And then the last piece is the regulatory piece. And I think I have a good nose for this. I hope I'm right. Gary Gensler is indicating, he taught a course at MIT on Bitcoin and other cryptocurrencies, and he's indicating that he recognizes the value. And I would suspect that these Bitcoin ETF applications, of which I have one in place, will start to get approved by the SEC. And I think Bitcoin's price is actually reflecting those thoughts.
Yeah, it's interesting you mentioned that regulation. I mean, I had, Dan Morehead here a couple weeks ago, former Goldman guy like yourself, and he sat next to Steve Mnuchin, and he said, like a bunch of my guests did, he said, I don't think that you'll see JP Morgan, Morgan Stanley, all these institutions going in if they didn't have a feeling from regulators that this wasn't just going to be, have the plug pulled on it immediately. So most people feel pretty comfortable. Do you feel that same way, as if regulation isn't going to stop you dead in the tracks or stop this market dead in the tracks?
Yes, I feel that way, but I want to add just two sentences. I think where Dan's coming from is the United States still is the global leader in terms of the financial center of the world. London still has elements of that as well, so I'm not trying to disparage London. But if you look at the Wall Street community, it really still is the financial arterial structure of global capitalism. I don't think the United States, from a regulatory perspective, wants to cede that. They may not like Bitcoin. They may not like what's going on in the world of decentralized finance. But you saw in the infrastructure bill 6 or so weeks ago, where the senators don't really understand what's going on, but they could feel the lobbying pressure from Bitcoiners and other crypto people. And they were like, okay, well, wait a minute. This is here to stay. Brian Armstrong, the CEO of Coinbase, met with Jerome Powell in May of this past year. I'm pretty good friends with some of his founders, people that are on his board. I think the resonating message was, listen, don't cede this to Singapore or Hong Kong or London or Malta. Give us the opportunity to be fairly regulated here in the United States so that this ecosystem can burgeon and we can create all these jobs here in the US. And I think that message is pretty clear and resonating with our public servants.
Yeah, that's good news, and hopefully they'll see it also as a potential, taxation bonus. And some people have said they're not going to, kill the golden goose if they can see it that way. Obviously, infrastructure bill, we saw it. So I had one of my guests that said it was the greatest piece of free PR that Bitcoin ever got was that infrastructure bill, and ultimately a net win. Just to finish off with regulation, how did you see that bill and what's happening on that?
Well, it's interesting because Elizabeth Warren was railing on Bitcoin, fairly nasty about Bitcoin, rebuking it. And then you could see she either got influenced by her donors or somebody explained to her, if you're a progressive, Bitcoin could actually serve the underbanked. It could help as a mechanism to get more people into the financial system. It's lower fees. You don't have those minimums, all that sort of stuff. And so lo and behold, even the people that thought that they were against Bitcoin, once they understood it, I think they got more in the middle of the road as it relates to regulation. And so my attitude, the narrative coming out of that infrastructure bill is they're going to treat this like they did the junk bond market. You and I are old enough to remember the inception of the junk bond market and the uncertainty from the regulatory perspective of what they were going to do with the junk bond market. They ultimately accepted it and embraced it as part of the financial systems architecture. And I think that was the message you were getting post-infrastructure bill, that Bitcoin's here to stay. And you said it better than me, follow the money. These guys are going to tax it, and they're going to drive major benefit from that as well.
Yeah, let me get to that moment where it clicked for you with Bitcoin, because you said you studied this for 3 years. And that is about right. You left the White House in 2017. You started accumulating in 2020. I've heard you say some pretty prescient things about this piece of technology. And you said before, either you get it or you don't. To a lot of people, what was the thing where you were like, okay, I'm convinced now? And again, you didn't have to do this. You were running a conference, a massive fund. You could have easily stayed out of this game and continued your life, but you decided to go into the fray, into the storm. So something must have clicked with you, or maybe that's also your personality.
Well, I don't want to be overly philosophical, but there was a eureka moment for me. When Marc Andreessen said that this was more important to work on than the Netscape browser that he created, than the actual web browser and all the exponential growth, synergy, and productivity of that, I said, it was okay, I got to understand this better. When Jack Dorsey, the founder of Square and Twitter, said that the most important thing he can work on in his lifetime is Bitcoin and the blockchain, these guys are a lot smarter than me, Brian. And I said, okay, I have to understand where they're coming from. And I don't want to oversimplify this, but I want your listeners and viewers to understand something. If they're right, and I believe they are, what is the blockchain providing? It's providing permissionless transaction activity. It's providing peer-to-peer transaction activity. We don't have to trust each other. We don't have to know each other, but we can trust the forces of the blockchain to allow us to transfer value or to exchange goods and services without bartering. And I just want you to think about this for a second. You get your identity from the government. In New York, I'm issued a New York state driver's license, and I'm issued a governmental passport from the United States if I want to travel abroad. But with the forces of the blockchain, I could actually prove that it's me over the blockchain, and I could self-create my identity over time, where sovereigns and other people will actually accept that that's actually me. That's my fingerprint in the digital space. When you stop and you think about it from that point of view, the synergies, the cost savings, the dramatic changes in our world. I buy deodorant from Amazon. The deodorant I buy is typically made by Procter & Gamble or Unilever. Amazon is a third party. I'm going to them because I trust them. They're going to deliver it to my doorstep. And those two producers of the deodorant trust Amazon that Amazon is going to pay them. But over the blockchain, I may be able to someday go directly to those two producers, and they'll trust that they're going to get that payment because it's coming to them over the blockchain, that value transfer, and they may be able to deliver that deodorant directly to my house, cutting out that third party. Now, that seems incredulous to people, but it may not be. And so when you really understand the philosophical tenet of what is going on here, that we've improved our money, the same way this smartphone has improved our communication, and we have more computing power in this phone than landed those people on the moon 52 years ago, the internet of money could start eating our bank branches. It could start eating our service providers that we see as third-party intermediaries in the exchange of commerce. And let's just talk about this phone one more time. All these books in this room can be eaten by this phone. In addition, there's room on there for my videos. There's room on there for my photography. Or I have a search mechanism where I could search all the great libraries of the world from this phone. So what is software doing? It's actually eating the world. It's miniaturizing it. And this electronic form of money can actually do the same thing. We could start seeing things disappear. And I'll tell you what, that's very green. In the 1950s, 60s, 70s, 80s, I'm driving to the bank branch. So's the teller. We're going to heat that bank branch in the winter. We're going to cool it off in the summer. Think of all that carbon emission. But now I can just use this phone and I can begin the process of transacting with each other. And I just want you to think of the ecological savings of that and the monumental cost savings involved. And so once you get that, once you have that eureka moment, in the immortal words of Michael Saylor, and I know you've had him on, he said his first Bitcoin was the hardest one to buy, but once you buy the first one, you recognize you don't own enough of it. You have to figure out more ways to squeeze more and more of it into your portfolio. And so I hope that wasn't too long-winded, but I want to at least explain to people where we are philosophically.
Yeah, that's a great explanation. You quoted Marc Andreessen twice there with the software is eating the world. And, it's interesting to be in this space because sometimes it feels like we're in an echo chamber. And then you try to step out and look at first order principles, which is something that Saylor talks about, Raoul talks about, and says, okay, let's look at this. And you look at, the rate of internet adoption, it was like 62% year on year. Same with like mobile phone adoption. And, Raoul's got this charted around, 112% year on year. Even if that's, a little bit over, it's the fastest growing thing we will probably ever see in our lifetime and maybe for generations to come. And it's clearly disrupting things. I think also, Anthony, it's very hard for us to understand it because you and I and everyone else grew up in a world where we don't really control our finances. And I think you once said that, it's like your time and money are conjoined. We don't realize that your bank is basically involved in your life every hour of every day. You just don't know it. So to try to get that message outside of this, system is hard. And that's why I've said it takes a village. There's that phrase that it takes a village to raise a child. I think it takes a village to educate the world on crypto because, it's when Saylor calls it digital property, bam, I'll never forget that the rest of my life. When you make a point about it's a ledger and, currency's been around for 5,500 years and this is how I see it, it's like, okay, that makes sense. When Andreessen says, hold on a second, this is bigger than the biggest thing I created. And Andreessen Horowitz is going all in on this because it's the most important technology ever. You're like, okay, these guys are pretty smart. Maybe we should start to look at this and really understand it. But it takes a while. Like I said, I've been having conversations here for 8 years And I finally just got it. And owning that first piece makes a difference. Like you said, the first Bitcoin is the hardest to buy. And once you buy it, you want more. You did some research into money, I think, when you were coming around to finally understand this. And I think you did go back to 5,500 years. You looked at gold, you looked at ledgers, and then you looked at the dollar, and you looked at what happened post-pandemic, and you said, okay, now I really see this disconnect. Can you explain some of the things that you learned and then talk about the dollar? You know, I had my 17-year-old daughter, Gabriella, in here 2 weeks ago, and we had a conversation that we were having at home, and she didn't own any crypto, and she was saying, how can they keep printing money, and asking all of these amazing questions that, you know, only a teenager or a kid would ask, that we all should be asking. Tell me your view on money after you did that research.
Well, I mean, I'll say a couple broad things first, you know, and I would recommend Professor Ferguson's book, The Ascent of Money, Neil Ferguson. You could also watch the PBS documentary that's available in most places now, which just describes what money has actually been to civilization. And so, not to bore people, but all it is a technology. It's a tool that we're using in exchange instead of bartering with each other. And so we use seashells, wampum, grain. We had gold coins or silver coins stamped with Roman emperors' profiles on them, or the leader of the day. And we've had that constant transference into that technology of what we perceive to be value. But one axiomatic fact of money, it's never worth what the goods and services are that we're trading for. You know, I have a piece of fabric. It's not paper money. It's actually made out of cotton and linen, at least in the United States. And that piece of fabric painted green, just a piece of paper, but yet it has symbols on it, and it's a totem that we trust with each other. So the second axiomatic fact is it has to be a trusted network. I have $100 bill. I can go to the pizzeria with that piece of fabric. They'll take it from me because they know they can give it to another person who will accept that fabric for goods and services, or for the labor to make the pizza, and so on and so forth. Or think about it electronically. If I like a G-Wagon and I want to wire electronically money from my ledger, it electronically spits out to the other person's bank account, the Mercedes-Benz dealership. 200,000 of those later, the G-Wagon shows up in my driveway. What are those things worth? They're just electronic bits. But what Professor Ferguson would say is they're a network. They're a trusted network, and we trust it, and it's been based on and backed by the government, and so therefore we trust it. And so what has happened, unfortunately, throughout history is that the money gets corrupted, because what governments have a tendency to do is they have a tendency to create more volume of it, and the volume will actually solve short-term solutions, or the volume will actually induce more exports. You know, you may remember from your 11th grade European history course on mercantilism. You know, if you're lowering your currency or devaluing your currency, you can send exports through the roof. And so John Maynard Keynes in 1944, when they sat at Bretton Woods and they were resetting the currency table and they were resetting the idea of global trade, Professor Keynes actually wanted a single currency. All the other industrial nations pushed back, but his point was a single currency will keep us all honest. We won't be able to manipulate our respective currencies, and it'll help global trade, but more importantly, it'll help middle and lower middle income people. Because you said that the bank is a part of our life, but you know what's also become part of our life, Brian, is the central bank. Anybody that owns dollar-denominated assets or pound-denominated assets has been taxed by their neighborly central banker, because they've produced so much more money over the last 13 years. Let's just go over the last year. In the United States, the M2 supply of money, the supply of dollars, has increased 37% since April of 2020. In the first 5 months of 2021, we electronically created $469 billion. So we have more money in the system now, sloshing around in the system. So whether you like it or not, you got taxed, because if you have $10,000 in your bank account, well, it only has $9,200 worth of purchasing power today relative to what it had a year ago. And so we have to understand that, and that's stealing our time. That's stealing our energy. Now, if we own assets, we're well protected. Calvin Klein, the fashion designer, bought his Hamptons real estate waterfront property for $3.6 million in 1987. He sold it last month for 85 million fiat dollars. And so we crushed that currency. And so what happened to us is we had very good wages, aspirational living standards for America's middle class and the middle class in Western civilization. But 50 short years ago, in August of 1971, August 15th, Richard Nixon said, we can't pay back our deficits. People want our gold. The dollar was tied to gold. It was $35 per ounce of gold. And so what Richard Nixon said is that we can't do that anymore. So we're just going to let our currency float freely. And it had this huge disruptive effect in global commerce. It caused massive inflation in the 1970s. Inflation was subsequently tamed by our Federal Reserve and emerging technologies that brought down prices, but it corrupted the money. And so let's just go through the math. $35 an ounce in 1971, it's $1,700 an ounce today. We took our money down about 98%. So to put it in real world terms, $2 American has the purchasing power of $100 American today. And that is damaging. It's damaging to the middle class. It's damaging to the lower middle class. It may help us in the short term, but it has very long-term deleterious side effects. And so in comes Satoshi Nakamoto, or the group known as Satoshi Nakamoto. We started this process aggressively in the 2008 financial crisis. He said, well, listen, if we're going to corrupt the money like this, we have to use our technology to create money that can actually offer a standard for the world or some type of stability to long-term value. And he basically said, if you understand what I'm saying, then you'll recognize that we can create this ledger through mathematical properties. And if I'm right and people start to accept it, well, then the coin, the Bitcoin, or that currency will start to rise in value, because it'll start to make sense that will be the currency that we use in terms of the transfer of goods and services. So listen, if you looked at it in 2009, so okay, that's hard to believe. It's worthless. It's just an electronic cryptograph. If you looked at it in 2014, you say, whoa, people are adopting it. They're starting to recognize that it could be real. And then, of course, last year when it got to 100 million users, I turned to my team and said, that's escape velocity for me. Now, the good news for everybody listening, we are still early. The best time to have bought Bitcoin was 11 years ago. The second best time to buy Bitcoin is right now. Okay, so we're incredibly early. We only have a 2.5% saturation in the world. There's about 180 million wallets for Bitcoin today. If Cathie Wood is correct, it'll go to 1 billion wallets by the end of 2025. I believe that's the case. And if that's the case, given the scarcity of Bitcoin, these coins will be worth several $100,000 a coin. And I think it's important for people to have some of them in their portfolio. Now, of course, if I'm 100% wrong, I tell clients, let's have a small piece. If I'm right, you're going to be well rewarded. And if I'm wrong, it won't be enough to hurt you. But I think we're going that way. So you have two things happening at once: an improvement in our currency through technology, and a destruction of the old system born from the capricious nature of our policymakers and our politicians. So those simultaneous interactions are creating a ripe environment for this type of technology to emerge.
Yeah, you mentioned gold there, and Peter Schiff will tell you gold is real, gold is in jewelry, gold is in production and future production, and you're talking about something I can't see, something that's digital and something that's a Ponzi scheme, and it's only valuable because someone else thinks it's valuable. And I've seen you guys debate, and there's gold bugs out there, and there's the fuddy-duddies, like you said, the boomers that still can't see it and are wondering what's going on. I'm curious what Buffett and Munger think right now, and even what they'll think in a year if you sat him down. But he probably is still at rat poison, but he's probably somewhere around there. What do you say to those people that say, I can't see it, I can't do it? And also, as you asked Peter on the end of your debate, I think you did with The Economist, when must they capitulate? What is the evidence needed for them to say, okay, you're right?
Well, I think in Peter's case, it's never, although I always sheepishly say to him, he's probably long Bitcoin right now because he can't take the pain of missing out like this. But I think, listen, in that debate, he made a lot of good points. I am not negative on gold. I don't see gold trading to zero. Gold has been with us for 5,500 years. I'm not negative on it. I'm just saying that Bitcoin is providing something into the international commercial activity that is very valuable, a result of which it will become more and more valuable. I do think it will get to the market cap of gold. So Bitcoin right now is $800 trillion in market cap, and gold is 7 or 8 trillion. I do think that Bitcoin will trade to that. So he'll say that it's worthless, but then he's not factoring in the value of the network, as I tried to point out. Bitcoin is a network. So, excuse me, just stop and think about that for a second. We've got 180 million users now on their way to the billion. You can't tell me that that's not valuable. Professor Robert Metcalfe, who invented the theorem of Metcalfe's law, would tell you that that's valuable. That's the process that made Facebook and Google and all these companies valuable. But he'd say, well, you can't manufacture with it, et cetera. But let me tell you something. Gold's representation of its value is only 5% of it in the jewelry and the manufacturing. The other 95% of it is the perception of value. You have to remember that about the way people think and work. There is a friend of mine that bought a cardboard rectangular shaped piece of paper. It's cardboard. It had 4-color process print on it from the mid-century, the 20th century. There's a picture of Mickey Mantle on that card. It's not even a great picture of him. It's not HD quality or anything like that. That card just sold for $5.2 million. Oh, there's an art, the Salvador Mundi. There's a big debate over who actually painted it, but people think Da Vinci painted it. It sold for $450 million. What is it exactly? Well, it's a stretched piece of canvas with acrylic paint on it. Okay, so how could that be worth anything? And then if you stop and you think about it, well, it is to human beings because there's scarcity, there's artistry, there's a whole set of things from a sociological and psychological perspective that make things worth something to human beings. And I think where Peter is missing out on this is those cryptographs are worth something because they are perceived to be worth something. And they're worth something because I know I can transfer those to somebody that believes they're worth something. The same way I can transfer that piece of fabric with Ben Franklin's face on it. It's just a piece of fabric. It's not worth anything, but it is to somebody. Okay, and that is tied to the way human beings have interacted for 5,500 years. Bitcoin represents an improvement on that. One of my friends who will remain nameless, he lives in a monarchical dictatorial society. So we're just going to leave the country nameless too. He said, well, let me tell you something. He said, if I got to leave the country, I can hide $200 million of Bitcoin in my body somewhere, okay, on a USB. I can't do the same thing with gold. And it just tells you about the user friendliness and the transferability of what Bitcoin is representing. So listen, you asked about Buffett. I just want to address this for a second. Anybody that's done the homework that I've done or you've done has changed their mind. I'm not a Bitcoin evangelist. Brian, I don't think Jesus got together with Moses. They had a baby and they named the baby Bitcoin. That is not me. I'm an investor who's a skeptic. I'm an investor that's been burned many times in my career. So I have to always be watchful of that. But I can tell you, if Ray Dalio said he didn't like Bitcoin and he did his homework, he now owns Bitcoin. Stan Druckenmiller, I don't like Bitcoin, did his homework, he now owns Bitcoin. That would also include Paul Tudor Jones, Steve Cohen from Point 72, now the Met owner, Daniel Loeb, the billionaire investor at Third Point. So my point is, if Warren Buffett and Charlie Munger did the work, I think they would see Bitcoin very differently. Last quick point. I was at the Allen & Company Sun Valley Media Conference with Mr. Buffett and a gentleman by the name of Jeff Bezos in the year 2000. Jeff Bezos was making a presentation about a company called Amazon. And he was explaining, yes, I'm losing money but I'm scaling right now. And as I scale, I'll be able to sell everything on this internet platform. And a result of which this will be very valuable because of Metcalfe's law. The next speaker was Warren Buffett. He said, yeah, that sounds nice. I will never invest with you. You're not making any money. And a result of which I don't get it. And I'm going to stay inside my circle of competence. Well, if you'd invested with Jeffrey Bezos on May 15th, 1997, you put $10,000 into the initial public offering, it's worth $21,140,000 today. However, you would have to subject yourself to 8 periods of time where it dropped at least 50%, 1 period of time where it dropped 85.5%. And there was a Barron's News article, cover story, said Amazon.bomb, the final days of Amazon. And so what happens typically with Metcalfe's law, they adopt, they have huge volatility curves as people are trying to get an understanding of what's going on, but they ascend. And I think if Warren Buffett or Charlie Munger got outside of that style box and did their homework the way Ray Dalio did it, I think you would find them to be users and owners of Bitcoin.
Yeah, I like your point about Amazon. That's unique to you with that IP. And, you know, Max Kaiser said, I've watched 3 different 90% price corrections in Bitcoin. And Max, who's always bright and shiny about Bitcoin, said that will kill the spirit, you know. And a lot of people have revisionist history about Amazon. And like you said, Bezos is the richest man in the world right now. And you're looking at the network, which didn't make sense at the time. And who knows, maybe Buffett and Munger will just go out believing in Coca-Cola and Hanes underwear. And I get it. It's their sphere, and who knows, maybe that's what.
But then, you know, Coca-Cola is a network, Brian. You see, so that's the weird thing about it. So I use that as an example as well. You want to talk about a network, Coca-Cola. Let's say we destroyed all the bottling facilities, wiped out the trucks, took out the corporate offices. If I went to Wall Street with the words Coca-Cola and I said, I want to rebuild this, could I get the money? And the answer is yes, because it's a well-established, well-known network. If I said, I'm coming to market with blankety blank cola, they'd laugh me out of the room. But Coca-Cola means something. It's the second most recognized phrase in English, second to okay, the phrase okay. And so therefore, Bitcoin, 12 years old, with this expanding, growing network, the network itself is valuable the same way the URL, google.com, amazon.com, it's valuable. You want to shut down Amazon, you have the word Amazon now, that is valuable.
All right, Anthony, you manage people's money. What percentage of their portfolio should they have in Bitcoin?
Well, I'm irresponsibly long Bitcoin. I have about 20% of my assets in Bitcoin, but somebody would be very smart to point out that I had 5% of my assets in Bitcoin last October, but as a result of appreciation, okay, it's grown to 22% of my assets. I tell clients 1 to 3% of assets. But by the way, clients that listened to me at the beginning of the year, if they had 1% in their assets, they now have 3.5%. If they had 5%, they've now got 10 or 11% of their assets in Bitcoin because of the growth of Bitcoin. And what I would tell them, if they like Munger and Buffett, Warren Buffett had a great line in the 1990s. They asked him about diversifying because they said, your portfolio is very concentrated. He said, well, I'm not selling Michael Jordan. I wouldn't trade Michael Jordan for 4 scrubs, and then call it diversification. And so for me, I tell people, I got a lot of Bitcoin, but that's as a result of being successful in Bitcoin. So I have no interest in selling it. But I would say a starter position is 1 to 5%.
And again, you've been around the block, Anthony. You've been burned. You've seen things go up and down. You've seen sure things go down. I mean, I was in the dot-com boom, and I thought for sure, this was going to Pluto. And we had a massive sobering correction, I think, in 2000. I mean, that's your job. You manage portfolios. How can you educate maybe people listening and watching us right now, especially a lot of the newbie crypto owners, the crypto day traders that have never owned another asset in their lives, the ones that, because of the community, like you said, are evangelists and maybe trading for the first time and not understanding this? What do you say to them about that concept of risk management?
Well, if they're day trading it, I said, boy, you're going to get burned because you're going to be catching falling knives. You're going to be exuberant at the top, and you're going to be woeful and despair at the bottom. And you have to train yourself to think in the opposite. When Bitcoin was at 29,000, we sold some Bitcoin out of our fund in April, and we bought some back when it was trading at like 29 to 33,000. We're net buyers right now at the $50,000 level, but the point being is you got to go against your emotions in life. You have to run towards the bullets at war, and you have to run towards the panic as an investor, and that takes a lot of guile and it takes a lot of experience to do that. But what I would tell people is, if I'm right, if Marc Andreessen is right, if this really is a technology now that can allow us to interface and transfer with each other without a bank, without the government, and we can all of a sudden be that sovereign individual that we often talk about. If I'm right about that, then this is going to be exponentially growing over the next decade, if not the next generation. And a result of which I would want to be long it, and I would want to be patient with it. And I would want to look to other things that track Metcalfe's law that were fraught with volatility, which would include Facebook and Google and Netflix. And there's been a lot of boom and bust in every one of those things as they matured. And then they stabilized. And then once they stabilized, they became the fait accompli of the institutions and the fuddy-duddies. But what I would tell my clients, and by the way, I always say this to second generation people, first generation people like making money. They're comfortable with it. They've got self-confidence. They'll throw the ball. Second generation people have a tendency to want to preserve money. I always tell second generation people, you got to get in the money making, throw the ball mode if you want to be super successful. So it's just something to think about. And I think you have to be part of this. This has to be part of your investment portfolio. And because I believe it's going to be a very big part of our future.
Just quickly, price prediction for Bitcoin by year end. And if Cathie Wood's right, and we got 1 billion users by 2025, she's at ARK Invest, then what does that indicate the price is going to be, roughly?
So I got it at 100,000 by year end. We're at 50,000 right now. Could I be off? I think I could be off, but it's going to be more on timing than it's going to be on price. Could it end up being the first quarter of 2022? But it's going to 100,000. You don't have this amount of demand and this type of fundamental growth in it, and this limited level of supply where it won't push the price up. And if Cathie's right, and I believe she will be, it's 1 billion users by the end of 2025. We're talking about at least a $500,000 coin at that point. And remember, these things can be broken up into Satoshis. There's 100 million Satoshis per Bitcoin. At some point, I think someone's going to create a stable coin. How we have a baby Berkshire as an example. They'll create a stable coin that's a fraction of a big Bitcoin. And you'll see some of that happen. And remember, if they introduce ETFs in the US, and there are many applications, mine is among them, that will be incremental and exponential demand for Bitcoin and things like Ethereum.
I'm just taking a step out of the room and looking at the two of us. You've been on Wall Street since 1990. You are now calmly talking to me about an asset doubling in price in the next 6 months with liquidity, with access. Have you ever remembered any situation in your entire banking history where there was an asset like this, where you were this confident of the probability of that happening?
Well, there should have been. There wasn't, but there should have been. I should have been this confident with Amazon. Truth be told, I listened to Jeff.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.